Good afternoon, everyone. Thank you so much for your kind patience. Now we proceed with our last panel for the day, investors' expectations and the red flags. For this panel, I would like to invite on stage the partner at K Capital, Mrs. Sunitha Viswanathan, the CEO of FAAD Network, Mr. Aditya Arora. From the investments team at Blume Ventures, Ms. Radhika Agarwal. The investment professional at Chiratae Ventures, Mr. Saketh Katikaneni. And finally, the moderator for the panel and investment expert at Loisto Advisors, Mr. Vivek Singha. Vivek, over to you.
Thank you, Abhinav. Good evening, everyone. Welcome to IXI Summit 2022, presented by you and SIPT. Hope everyone and their families are keeping safe. Tough times, but thank you for joining us. In this session of the summit, we'll host a panel discussion with some leading investors in the edtech space. Investor expectations and red flags is our topic of discussion today. Before we do that, if I could request the panelists to briefly introduce themselves. Maybe we start with you, Sunitha.
Sure, thanks Vivek, and thanks for putting this event together. Very glad to be here. I work at K Capital. We're an early stage fund. We look to invest as the first institutional investor. We typically come in at the stage where the product is pre-launch or just about launched, and the company is still trying to figure out product market fit. We invest between $500K and $1.5 million. We tend to partner with the companies that we back for the longer duration of time as they build the company. EdTech is an area that we're very interested in, and we're looking to make investments across the spectrum in EdTech.
Thank you. Radhika?
Hi, thanks for having me, first of all. So I look at consumer tech investing at Blume Ventures, which is much like K, actually also an early stage tech VC in India. So again, we're sector agnostic, do everything from like agri to space. EdTech is just something that we've been very, very passionate about, fairly over-indexed fund in EdTech, early backers in both Class, Unacademy, Leverage. So great EdTech portfolio cooking up there. We also typically come in somewhere between MVP to PMF, maybe closer to nearing PMF, at PMF. That's the stage we like. Can do anything from, say, a 250K check to about a 2.5 mil check in the current fund cycle. And some of our portfolio companies that you may have heard of would be Dunzo, Unacademy, like I mentioned, Grey Orange, Purple, Spinny. So yeah, excited to hear the rest of the panelists as well. Thank you.
Thanks, Saketh.
Yeah, good afternoon, everyone. Thanks for having me and thanks for joining in. I'm Saketh and I work as an associate at Chiratae Ventures. Chiratae Ventures is an early stage venture capital fund, much like K and Blume. We invest predominantly at the seed and Series A stages. Typically, our check sizes range from about $1 million to about $10 million. I spent a good part of my last 2 years here thinking about and investing into EdTech. Happy to be here and share some of the learnings, and let's see if some of this is useful to you. Thank you.
Thanks, Saketh. Aditya?
Yeah, hello everyone. Thank you so much for having me. Always a pleasure. So my name is Aditya. I'm a partner and CEO at FAAD Network. We are a group of early stage investors, HNIs, VCs, family offices, and we are investing in again early stages, right from about a seed stage to about pre-series A stage. We come in very early where companies are just out there spending their first few days in the market and have got some level of traction. So we come in, we put in our capital and help them to grow to the next level. So yeah, that's about us. We've grown to about 1,200 plus investors in the last 2 years. We've invested in close to about 50 plus companies. So we are very aggressive and active in the ecosystem. And yes, early days for us. Companies are growing, but yes, I'm happy that we'll share some success stories in the future. Look forward to the event.
Thanks, Aditya. Everyone, great to have you here. I'm Vivek. I'm an associate at Loisto Advisors. We are a small boutique IB based out of Hyderabad. We also, like all of us here, are very passionate about EdTech and do a lot of work across fundraise, M&A, and business advisory. Great. So we have about 45 minutes to discuss the topic for today. We'll leave 10 minutes for Q&A with the audience. I request the audience to type in the questions in the comment box there, and then we can take it up in the end with the panelists. Great. It's always exciting to talk about EdTech. Great years behind us and still coming. 2021 was amazing. A lot of funding, 160 plus deals, 3 unicorns, one already in 2022. New business models coming up, and hope to continue to see them. So let's jump right into it, shall we? So usually investors have a certain, not defined, but a certain framework that they look at when they look at startups, green flags, so to speak. Let me throw this to you, Radhika. What are some of the things that you look for when you think of solid edtech businesses?
So I think any investment, like any VC, will tell you 3 broad buckets, right? Product, market, founder. So I think one is, and we've seen now a lot of second-time founders, CXOs of large companies kind of building in edtech over the last 18 months or so, just given how hot the sector has been. And I think one of the most important things, and they're all extremely brilliant operators. They know how to fundraise, they know how to hire. But I think one very defining factor is how passionate are you about the space. That determines your grit on that particular space, at least. That determines how easily you will pass on a acquisition opportunity, which in edtech right now is I think everyone is it's raining acquisitions. And while those make founders a lot of money, many of them are not too needle moving for an investor. So I think that's one. Just how passionate and obsessed are you about the space that you're building in, especially in edtech where we're seeing so many great founders building, right? The second is in terms of market. I think again specifically with edtech, large parts of the market are beginning to get a little bit crowded. So there naturally will be spaces that we'll kind of think twice. In K-12 test prep, for instance, of course, now we'll think twice before investing in, right? Because a lot of money already sitting in that space, a lot of cap tables locked, a lot of great founders already building very, very large-scale businesses. Certain spaces still have gaps, whether it's early learning, the more school segment, fintech for edu, upskilling parts of it have white spaces as well. So I think that's the second part with education is what are areas that at this point make more sense from a competitive landscape. Also, what areas are more scalable? So I think that for instance, tier 3 city learning is something that's obviously a very large opportunity in terms of population, but still figuring out how to build scalable plays there. One, because the money sitting in that consumer's pocket is of course lower. Second is language barriers make a single product very hard to scale. Right, I can build something in Hindi, but that's not going to go work in Karnataka, for instance. So I think that's the second in terms of how scalable is that space. So that's kind of it from my end.
Thanks, Radhika. Saketh, any thoughts?
Yeah, I think I'll just add on the team bit. I think along with having a team that's very passionate, I think with some of the companies that we've invested in, one of the big learnings has been that edtech organizations are usually slightly complex and multivariate organizations. They have these set of people who are domain experts, like people who design curriculums, content creators, people who design UX for learning for kids, teacher training. All of these are, deep domain expertise skills. And you need to have experts, who are sitting in these right positions to take decisions with respect to these, whenever there's a decision to be taken regarding these, right? One of the things that we've noticed that can happen, and this is something that we look at slightly later on, maybe say pre-series A, series A stages, is trying to see if the team has these experts in the right positions to make these decisions, right? Early on, one of the errors that can happen is a lot of these decisions are made by one or two people, usually the founders, and understandably so. But I think just an empathy and understanding that some of these are require, domain expertise, and leaving these, decisions for a veto by an expert within the team, I think is, it's a wish list early on that we have as part of the team. I think another aspect that I talk about, in today's edtech market is, for an investor, I think top of the funnel differentiators are important today. So let me just explain this. I think where we are in today's edtech market, I think that there is no debate that it is competitive. So how do you design some of these differentiators that will help you build enough traffic at the top of the funnel, which will ensure that your ad spends are minimal and are effective, right? And I think a lot of times what can happen is, there are various kinds of top of the funnel differentiators. Like you can have curriculum, you can have star teachers, you can have brand itself as a differentiator at the top of the funnel. But I think early on, and edtech itself is changing in a few ways. I think one of the ways in which it's changing is we see a lot of founders looking at product and technology as a differentiator at the top of the funnel, right? And let me explain this with a simple example of a company that's globally very well known. It's called Amira Learning, and what they do is they teach English. They help kids speak English better, and there are multiple ways to do this, but the way they are doing it is quite unique. They have an app which enables kids to actually speak into it, and they have a voice AI tool which tells kids and the parents out where these kids can improve in their speech, right? Like are there areas, are there phonics, are there areas where there needs to be more stress, where there is no stress, and are there areas which really need emphasis and work on. And with that, they're able to funnel users into telling them what needs work, and then funneling them into live online classes, etc. I think some of these top of the funnel differentiators are going to be key, and that's something we actively look for.
Thanks, Saketh. Sunitha, Aditya, any thoughts on this?
Sure, I can jump in. I think Radhika and Saketh have covered good ground. So just an extension on what they've mentioned, I think founder market fit becomes very critical. I think specifically in EdTech, by virtue of most of us having gone through the 12 years of our education system, we tend to extrapolate personal problems that we faced while we went through the system as systemic issues and basically try to then build a company around it. Unfortunately, that doesn't translate into a business always. So hence the founder market fit becomes very critical. Have you spent enough time? It could be as by virtue of running a coaching class. It could be by virtue of having been a teacher yourself, and then approaching the problem from a business mindset. And a lot of what we're saying becomes very critical, because are you then thinking for scale? Are you looking at solving tens and thousands of students' problems as opposed to thinking of solving just the neighborhood's problem or just one school's problem? I think that becomes very critical. And secondly, like I mentioned, scale. So tech for scale becomes very important. Are you thinking from day one that a lot of things, while I may be doing today to hustle around the typical Indian mentality of jugaad is great till you get to say the 100 customers or 20 schools or whatever be the model. But have I already started thinking of systems and processes that tech can make a lot of these things very easy? So those are some things, and EdTech becomes a lot more important and things that we kind of look out for.
Great. Thanks, Sunitha. Aditya, if you'd like to jump in.
Yeah, I think the beauty of going last is that you don't have to add much because the panelists have added most of the points. But I think 2 points that sort of I've kind of realized, because before, of course, turning into the investor side of things, I was an edtech entrepreneur. So I was very deeply rooted in the education system, and still continue to, in fact, serve as the advisors on the entrepreneurship curriculum to Delhi government. So with edtech, I think, firstly, of course, all the points that my co-panelist covered, I agree to all of them. All of that is very, very relevant and important. But I think 2 more points that I'll, of course, add as an extension is, one is the framework analysis that we do. So any edtech, as you know, has multiple approaches to solve the same problem, right? Even in skilling, you could have 3 different lines where you can take, be it a coding line, be it a, let's say, a vocational line, or be it, let's say, a more academic driven line. But at the end of the day, it's just about the overall development of a child or a student. So what's the framework you have chosen to solve that particular problem? That is very, very important for us. Is that framework feasible enough? Can that be done at scale? And second thing, in fact, now since I've spoken about scale, is the kind of understanding of the TG you've got, right? So what we've witnessed in most of the edtechs is they get a good early traction, but once they are scaling, then that becomes a leaky bucket where maybe students are not coming back, where maybe the LTV is not going higher, right? Where maybe the further response on ad spend is going drastically down. So all of that starts to happen in the further rounds when the company does at scale. So then the understanding of the TG that you have built, the community power that you have built, right? That becomes very, very important. So if you're not having that, then you can't scale with the right metrics, and you'll burn up, of course, most of the capital that you'll raise. So what TG understanding you have, how closely you're connected with that TG, is also one thing that we look at while investing early on.
Thanks, Aditya. Thanks, everyone. So, for our audience today, to sum up, there is no solid bucket per se that investors have when they look at startups in the tech space. Just be passionate about what you're doing. There are still gaps in the market somewhere in early education, schooling, upskilling. Tier 3 learning is an interesting market. Tend to sort of look at edtech as a business which has multiple variants, multiple factors coming in when you form a team, as Saketh said. Important to have domain expertise when you're building out a product in the tech market, because sometimes specialists will know the right thing to do. Important to also have some top of the funnel differentiators. As Sunitha said, important to have a good founder market fit, and to when you start scaling, to ensure that you understand your TG very well, because eventually as you scale, you start to see some more difficulties, and that's where your understanding of the TG will really come through. Okay, great. So let's jump into the other side of the spectrum now. Let's talk about some red flags. Maybe we start with Sunitha with this one. Sunitha, what are some red flags that throw you off when you sort of are evaluating startups today?
Yeah, so I think one minus what we all said is probably the red flags. But just to kind of elaborate a bit more into this. So I think not specifically for edtech, but just being married to your solution. So that is a big drawback. Not listening to the customer, not willing to pivot, because 9 out of 10 businesses end up pivoting. It could be pivot in 6 months versus pivot even in 2 years. So need to be constantly agile and flexible, and being willing to make that change. So we try to see early signals of whether the founder is open to that, whether the founder is adaptable to that. Then second one, slightly controversial, but given the last 18 months when it's probably been the best time for any founder to raise capital. So you're raising even when you probably don't require, or you're raising more than how much you require. I think to at least be very, and edtech actually throwing a lot of capital will not solve I can't ensure efficacy. I can't ensure learning outcomes. I can obviously ensure customer growth. So that surely is what capital can solve. But if you can't demonstrate what is clear-cut outcome of raising this capital and what will that translate into, in edtech, honestly, more capital is just a differentiator that, okay, you're kind of crowding out the space for others from raising capital. But doesn't necessarily mean you can actually build a successful startup. So trying to kind of think through what you really need to achieve and how much capital to fuel that growth is something that one would want to be very watchful of.
Thanks, Sunitha. If anybody would like to jump in, Saketh, Aditya, Radhika.
Sure, I can go next. I think a couple of red flags, and I mentioned these 2 red flags here because these are probably the highest volume of that I see across companies that I meet on a daily, weekly basis. I think one of the biggest red flags for me is a lack of understanding that, online as a medium doesn't mean better learning, right? At its core, online is a great distribution model and has tremendous advantages over the offline model in terms of distribution. But at the same time, intrinsically, unless you focus on it, online as a mode of instruction and delivery does not have intrinsic advantages in terms of learning, right? Unless you actually focus and build it out. And a lot of the companies that have stood the test of time have spent time, the Byju's, the Unacademies of the world have actually spent time thinking about this transition and what will make this learning online very, very efficient, right? And this is a very basic point, but this is a huge red flag I see across a lot of the organizations that we hear pitches of, which usually are, here's an offline class, there is a layer of Zoom that I add to it, and there is an online class that comes up, right? I think working in this way is not really efficient, especially I think where we are in the edtech cycle in India. I think you need to find more efficient ways to deliver. I think that's one of the biggest red flags. I think The second one, and again a very basic one, is understanding if the particular idea that you're working on or the approach that you're taking has a large enough market, right? And this is easier said than done, and this can be tricky at times. But I think a big red flag is sort of understanding the Indian context and applying the particular idea or the concept that you want to build on. And uh, don't get me wrong, I think a lot of times this becomes very tricky. Just to give you an example again, I think let's say something which is tricky, like the online English language learning for kids in India, right? Is it a large market? Is it something that can be tapped upon right now? In China and in Latin America, these are huge markets, and these are but the motivations there are slightly different from India. And India, kids, majority of kids do have English as a language in schools. So you could argue that there is a certain section in the Indian audience who may feel like this is a motivation for parents to tap into. But again, what is what is the size of this motivation? What is the size of these markets? These can be tricky questions, and although we don't look for right answers as investors, I think we always look for the right insights, right? Especially enough time spent to get these insights which are very core, and not sort of getting blindsided by the fact that, well, this is a motivation for a small set, and hence I can sort of project it to say that this will be a motivation for a very large set. I think this is a common mistake and a red flag that stands out for me when I speak to a lot of entrepreneurs.
I can kind of go next. So I think agree with something Sunitha said early on, right, about being married to the solution. One interesting thing that I've noticed recently about a lot of, I think specifically in edtech more so than in say media or commerce or anything else, is that there'll be founders who've been building their product for like 12, 18, 24 months and haven't released it yet. And sure, that works beautifully in like say deep tech or healthcare, but in edtech it doesn't work, because then who are you getting feedback from? Your PMs are not your customers. So I think that's definitely one big red flag. And I think similarly, you're not understanding your TG. We get a lot of founders who say, even in a post-COVID world, schools will be online, extracurricular classes will be online. And sure, online does mean that you can kind of bring a great teacher to a lot of folks who otherwise won't have access. But if you've spoken to half a dozen parents, you'll also know that offline classes are also free daycare. Not free, but at least it's safe daycare. It's a safe place for the parents to leave the kid, and especially if they're working, they're doing other things, and you can't take away that time from a parent. Or if you're building for a smaller city market, you're building for a user who doesn't have a fancy smartphone. You can't just be testing your product on your 4G networks. So I think a lot of those product building nuances on just that require understanding your TG a lot better. If you haven't done that, that's definitely a big red flag. The other interesting thing that I've seen more recently is more say on the soft skill side, where platforms try to solve for a whole bunch of different users. Sure, at scale, you can be imparting soft skill learning to a 5-year-old and a 15-year-old and a 65-year-old, but you can't start that way, because how you think of each of these users, what they need, what they'll pay, what their end goal is very, very different. So unless you're a hyperscale company and have the ability to deploy different engineering teams to solve these different use cases, don't start off solving for so many problems. And if you're solving for two sides of the coin, say hiring and upskilling for those hires, think twice about which side of the coin you're charging. Again, see a lot of cases where you're solving for one stakeholder's problem but actually charging the other stakeholder. Again, a large mismatch there on what you're trying to derive from each side of your user base, right? So I think just some of these things are very, very like small red flags when you think of them early stage. But it is something that an investor will think about over and over again when you pitch.
Thanks, Radhika. Anything would you like to add, Aditya?
Yeah, I think red flags are too much. I think so many red flags that you can spot out, particularly in edtech founders. Not just in edtech founders, but a whole lot of startup founders, where things, of course, can be right some of the times. But specifically to edtech, I think beyond what my co-panelist added, one observation that I have found out is most of, like, all the edtech founders are super passionate about what they're solving, right? all of them have a great background story of how they landed in this space and why they are solving it, right? Some of them have a very good personal story as well attached to it. And it's sometimes easy when you are in a sway of emotions and when you're in a sway of course, solving for a larger TAM in a larger market, that you run a lot of your show on assumptions, right? That this is how the market is going to evolve, or this is the addressable market that I'll achieve, and this is the obtainable that I'll serve very, very efficiently in. And then when you start to make these big promises, there is a big mismatch between what you are executing today and what you are promising for tomorrow, right? And that serves as a big red flag to me. You're saying that you're going to serve, let's say, the next 1.5 million users, but today when you're doing your early level of proof of concept, then only like you're hardly able to get any results for that, right? So that is when I kind of go back a bit, two or three steps back a bit, where I identify that if, let's say, a thing has to be delivered in a big way in the future, why is it not happening on ground today, right? And then I start to, of course, lose the plot of the entire story, where I see that it's more exaggeration or more a parable of facts rather than, of course, a thing married with execution, where you have a path to, of course, get to these users, where you have a path to, of course, monetize them at a later point of time or achieve the revenue that you are targeting. So that whole strategy, that whole business plan needs to be very well in sync, and that execution has some level of execution has to happen today for the facts or for the assumptions that you're quoting tomorrow. Yeah, that's what I wanted to add.
Thanks, Aditya. So this
Can I add one point here, Vivek, on passion, right? Passion of edtech entrepreneurs. I think that's the best part of meeting entrepreneurs in education. But it can be, like Aditya mentioned, right? It can be a double-edged sword. And one observation is, a lot of times this passion sort of converts into, a figment of, what is potentially the right way to learn, right? And coming up with an incremental difference in learning approach. And that sometimes can play out, but sometimes if it's not rooted in the right basics, it doesn't play out, right? Like that, you can see that it's coming out of right intentions, but a lot of times these incremental changes in learning styles can be just figments of a founder's imagination of what is the right way to learn, but they don't play out at scale. And I think that's something to be wary of.
Great. Thanks, Saketh. So we at Luestro also interact with a lot of startups on a day-to-day basis, and some of these startups tend to be very early stage startups, and monetizing becomes a very important question for them. Some of them tend to be 6 months, 12 months, 18 months into their journey, and wouldn't have started monetization. They're just scaling, right? Do you ever see that as a red flag when they have not, made any money from their customers, and you wonder while you're evaluating startups, I don't know if they will ever make money. Does that ever? Obviously that differs from product to product, but does that ever come as a red flag to you?
I can start. So I think Vivek, you got it bang on it. It depends product to product. I think so. Since I also look at a bunch of media investments at Blume, there absolutely no. If you're not monetizing, fair point. Seen great examples with like a share chat, for instance, where you're getting strong multiples based on engagement, whether it's a MAU number, whether it's a weekly active number, whatever that may be, without monetization at all. That said, I think. Uh, so I mean, yes and no, depending on the business model. So again, seeing a lot of players in the hobby classes space that are currently not monetizing or doing extremely low ball pricing. And when the wave started of hobby classes, that was to say that okay, fine, because you do have very, very strong cross selling ability there. You can sell someone a dance class if they're doing a music class with you, and so eventually, yes, you will build monetization from that. But it's now been about two years or so into that wave, and seeing a lot of players still unable to either monetize, or when they do start monetizing, a very drastic drop in their retention. So I think seeing examples like that has made everyone a little bit more nervous around non-monetizing, say, hobby class plays. But that still are, we're seeing plays that sell into schools, for instance, that don't monetize right now, because the idea is you sell to an entity which can give you such a large pool of students that become your B2B2C users. And so your end customer goal that you're able to monetize is so large. And so, yeah, sure, spaces like that, if you're not monetizing early on, especially at the seed stage, it works. But I think it really depends on A, the product, and B, clarity that the founder has on when and how will I start monetizing. I think that at least helps the investor sleep better at night, nothing else.
Just maybe to add, to kind of extend from what Radhika shared, I think there have been some models, especially where you're trying to do the entire micro learning side of things. And you want to then, and it could be because you're selling it into a different target segment, say tier 2, tier 3 cities. And the whole idea is that you can't charge a lump sum amount of, say, 10,000, etc. I'd rather do the micro payments. Those have come, there's been a mixed bag of success over there. You've not managed to necessarily increase the entire LTV of the customer. You're charging them, they come and interact and use the product once in a while. And there, the monetization hasn't kick-started in the way one would have envisaged. While initially the focus was completely in building growth and you want to kind of help the customer test and try the product first. So I think in EdTech, more so than with other models, the founder needs to be very clear how they're going to monetize. And at least in their heads, they need to be convinced it can happen. Unlike with other businesses where a lot of commerce can get created on top of content, commerce can get created out of community. EdTech, finally, if I can, as a parent or as the end user, if it's moving me from path 0 to path 1, I can get a job. I'm scoring better in JEE prep examination. If I can actually see an improvement, there is no reason to not pay. So if you still want to hang on to the fact that no, it will get monetized down the line, hopefully that down the line isn't years down the line. It's hopefully a few months down the line. And always try to do smaller pilots, right? Like it's so easy in today's world to do an A/B testing. I don't see why you can't. Even if it means it's 100 user base, see what is it, how much are they willing to pay? What is the motivation to pay? Are they coming up till the payment page and then suddenly they get cold feet and are dropping off? That's a data point too. So trying to do that, and more so in EdTech, like it has to happen. It's sooner than later is at least my thinking.
I'll just add to that. I think I agree. I agree with all the points made so far. I think there needs to be a path to monetize net. There usually the rhetoric today is engagement for companies that want to monetize later. They create a strong engagement funnel, and engagement comes first, and then that funnels into monetization. But I think for investors, what's important to understand is definitely why is engagement a means to an end, right? In this case, because we're talking monetization, right? And I think, to be very honest, I think there are a few core factors that a company needs to have in place to convert that engagement into monetization. Not every company can convert that engagement into monetization. And at least from, I think my learnings have been 2 or 3 key factors, right, that help this transition to happen. If a company is along this path, right, one is just time spent and users sort of coming back to the app, right, which just tells me that users like the product. I think second and the most important thing is structured learning kind of happening, right, on the product. And this is in the context of B2C edtech startups, right? People could be spending a lot of time, could keep coming back to the app, but that could be just for fun, or could be just because it's free and it's just easy to sort of spend some time. But I think your ability to offer structured learning in whatever sense impacts your propensity to get paid, because there are limited wallet spends that you are ultimately tapping into. And hence having that is important. And ultimately, I think this is to one of the points that someone alluded to, which is outcomes need to be clear for the user, right? And I think if you can manage some of these, I think if these are in place, at least as an investor, you potentially could build conviction that they, and these were the things in place for companies like a Quizlet or a Duolingo. And having not monetized for years, they were able to switch on this toggle of monetization. So having these in place and clarity around that is important.
Yeah, I think I'll add, but yeah, I think most of the points have already been covered. We have to give it to the edtech founders as well, right? Because building, of course, a solution where competition is so much. As in, if you look at YouTube, it's a potential competition to any tech startup out there, and that's free of cost, right? So uh, how do you start your monetization, right? And no one would want to monetize 50 users, just 50 users, right? Everyone would want to build a community and engage community, and then that when you start monetizing, maybe some people would drop off. So you want your percentages to work out very well, and that is when you are delaying that monetization just so that you can switch to a larger number, so as to when the fallouts happen, they don't happen beyond what you predicted, right? In addition to, I think what Radhika also said is when and how is important, but I think what is also very important, that what do you actually monetize, right? If tech, you are a full stack, you're offering 5 different stacks of services. What exactly do you think? Where is the core competency where the user would find value and pay for you, right? So what is again very very important? There could be a certain portion of the solution that you're building that you would maybe never monetize for your entire life. But what would be that core offering or that core solution which you think your community, of course, would place larger bet on? And that is when you pick up that piece and start monetizing it. So yeah, my thought when we made our investments in edtech was, and we've made close to about eight or nine investments in edtech, so we've been fairly covered on that side. When I started analyzing these companies was to, of course, look at monetization, because everything is a multiple revenue at the end of the day, right? But then when I looked at almost all the companies who are doing it in that space, and even if you look at Western counterparts and Chinese counterparts as well, the culture has been brought up from there, that engage the community first and of course then start monetizing it. That is when I realized that this is so deep rooted in almost every Indian startup founder, edtech founder that I'm looking at, where community of course is given precedence over monetization and commercialization. That is when I started, of course, drawing more and more inputs that your community aspect, your community power is again very important, but then your part to monetization, that should be very very clear. Because tech rounds, again, if you look at how they've happened in the past, is the first seed or pre-seed, or you can say even till series A rounds have been traditionally of a lesser valuation, right? Where founders even can't even put a price to their community. Founders don't even know how much would be the power of the monetization. Let's say they start monetizing from a small community and that explodes, right? So maybe you're undervalued today, you never know. And when you move to a series A plus stage, that is when larger valuations have started to happen, right? That is where larger multiples have taken into account. So yes, when you are at an early stage, I think it's not fair as well to put a monetization plan on any of these companies, because even we don't know how to evaluate them. That is again a very double-edged sword kind of a situation. But more importantly, what is important is that if you're investing early in these companies, you need to look at how the path to monetization would unfold, so that when these companies transitioned into a series A plus stage, and when the community actually starts to pay for some of the services, will that bucket still hold, or will that again turn into a leaky bucket and drop offs would start to happen? And there are many companies dead in this space as well, where the leaky bucket, of course, has sustained and fallouts have happened. So your path to monetization and what will you monetize is very very important.
Thanks, Aditya. So we have about 10 minutes left before we do Q&A with the audience. Just to let the audience know, what do you think will excite you as an investor to see in 2022 from a new emerging business model kind of a perspective? What kind of models seem exciting? We have new models coming in now in the metaverse, doing a play there. But you as investors, what do you find exciting today? Anybody, if they'd like to jump in.
I'll jump in and I'll do that just because I know a bunch of this maybe overlap with some of the other investors on the panel. So I'll probably take a stab at this. I think K-12, just given that there's a lot of capital that's been raised and a bunch of well-established players have emerged, one would not be as keen to look at it, at least in the conventional sense of what's been happening and the kind of startups one has been seeing. I think a lot of plays there in the early childhood education space. This could be either through hobbies, it could be critical thinking skills, high order thinking skills. It could just be a different way of kind of looking at education and so on. So a lot of plays there, I think, are not yet extracted maximum value so far. So there's a lot more interest over there, and I think there's a lot more capital that should be flowing in over there. So we've left the K-12, so then we're now looking at what happens post that. Test prep again has seen a mixed bag of success, and therefore one would probably steer away from looking at that space. Instead, one would like to look at the entire skilling and uplifting space. One would tend to corporate upskilling space. It could be mentorship, professional mentorship, etc. So I think a lot more can be done over there, making L&D a lot more working for both the corporate as well as for the employee. So those would be some areas one would like to look at. And I think there's some play also in the skilling for jobs. So if you can show an outcome over there, not too many established players, there's been some action there. But if someone can deliver outcomes and can show why they're differentiated, there could be a play there too.
Can go next. I'll build on what Sunitha said. Very, very, as she said, strong overlaps there. So on early learning, love that space. I think anything for like kids under 8. Ideally, what I've been looking at more now is just highly gamified. And the beauty of that space is because it's not curriculum aligned. If you've built in English, you can sell globally. So a huge market there as well. Seeing some great teams coming up. Anyone building in that space, please reach out. Also like the preschool space a lot, but I think that's need to see how that's going to pan out post COVID. But do think preschooling, as more families become nuclear, more women join the workforce, that space is going to become pretty interesting. And again, on the other end, Sunitha mentioned L&D. What I'll add on top of that is also coaching. So more leadership coaching, executive coaching, middle management layers. That space is becoming very interesting now. Again, strong India global linkages there as well. Haven't seen too many plays in this space, and I don't know if I do the best job of articulating it, but something at the intersection of social media and hobby learning for adults. So how do people in their late 20s to late 30s, early 40s pick up completely non-work skills? Again, a slightly more urban India 1, India 2 kind of market, and use that to also interact with their peers in India, globally, build connections, whether it's a professional network, linkages to dating for that matter. I think that space is going to become pretty interesting as well.
I actually have nothing much to add to what Sunitha and Radhika said. I think a lot of these are overlapping spaces, and I think just to bring about a lens of the business model into this, right, or basically models within some of these that could be interesting. I think at the other end of the spectrum of early learning, which anyway is very interesting in the continuous learning segment, I think anything which is very hands-on, feedback-based learning, your cohort-based courses, where your community meets learning. I think some of these models are seeing a lot of traction. Having scalable models around that will be very, very interesting. I think the world has been most changed, and your traditional learning models have given way to continuous learning, quote unquote, right? And I think another segment of edtech startups that's very interesting is just data-led and AI personalization, and bringing that into effective learning, right? Improving learning outcomes using AI and using data. I think that's sort of really the new wave of edtech companies. I think K12, as Sunitha rightly pointed out, is saturated in some sense, but also there's so much we've seen, but also I feel like there is a new wave that will start, which will try and focus a lot more on personalization, which will focus a lot more on ensuring learning outcomes using AI. I think we're at a very, very early stage in that, and I think that could be very exciting as well.
Yeah. So I think, Sunitha, Radhika, and Saketh have covered most of the points, and I was canceling points as I was waiting for my chance to come. That this is a point I can't sort of speak more on. But I think one beautifully covered by everyone that covers all of my spaces as well. But I think one thing that I want to see more happening is a more a peer-to-peer learning. Right? I think most of the solutions that are there are just throwing stuffs at students, assuming that okay, this is the best thing that we are selling, right? Or this is the tonic that we are giving. But a lot of peer-to-peer interactions are a very big white space that's not happening in some of these edtech forums, where communities are said to be active, but they're actually not that much active. So I think a lot of dry powder is there if you talk about peer-to-peer learning, and also around, if you can of course gamify, make that more interactive, and focus more on early on, right? A lot of edtech solutions are sort of also getting a bit delayed when they are coming after the problem has already come, right? So what if we could go 2 steps back, and try and make sure that this community, of course, is learning from each other, interacting with each other, and moving towards the problem, where let's say it's either can be an entrance exam, or either it can be a big placement job, whatever it is, whatever the future hurdle would be. We're all preparing towards that, and it's happening through a lot of user generated content than the existing contents that is out there in masses already. So that is, I think, one where I haven't seen a very organized and a very formalized solution. And yeah, if again making a reverse pitch, that if anyone is building it, more than happy to have a look and evaluate.
Thanks, Aditya. Thanks, everyone. Great insight. I think we can jump into the Q&A now. We have some interesting questions. First one is from Sagar Menon. It says, Radhika briefly covered EdTech for soft skills. Since I am building for the same, I would love everyone's opinion there. While I have observed the motivation to learn soft skills is lesser than technical skills, do you think B2B is a better market for it?
Sorry, did you want me to start?
No, anybody can.
Okay,
Anybody can start.
I can take a stab at it. So we saw that with English, right? Like I think a lot of English learning plays that were meant for adults pivoted into B2B because they saw far more monetization there. I think it depends on what market you're building for. We're definitely seeing some soft skill plays become larger in the slightly more urban markets where the willingness to pay is higher. I think you're looking for the intersection of ability to pay for that space, and also you feel that it's an important enough skill for you to learn. So I think those we're seeing typically either in slightly more India one urban markets or in B2B where the employer kind of pushes that. So I think it really depends on what age group you're focusing on, what market you're focusing on.
Great. I hope that answers Sagar's question. There's a question from Priyanka Kamath. It says, with the rise of cohort-based learning and P2E biz models, it is currently imperative to have a thriving community built first. How do you reach from 0 to 1 in order to say, build an edtech community? Do you start by launching the basic MVP product and then pivot to customizing the product to community for a skilled recommender engine? Actually, even I find this question fairly confusing. Let me just repeat the last bit. Do you start by launching the basic MVP product and then pivot to customizing the product to community for a skilled recommender engine?
Not sure, but I'm assuming the question is how do you build an edtech community and should you focus on the MVP? So if that's the question, I would think yes, please do get an MVP out because again, one of our earlier comments, don't be married to it so much that you're not willing to let your baby out of the door. So do launch it. And some of these, how do you build these communities? A lot of these communities already exist in different digital platforms, whether it's say Discord, Telegram, WhatsApp. So that's always a great starting point. As a founder, you should have already been in these platforms to understand what is the customer behavior. What are they doing? What is not getting solved over there? Why do I need another platform? What is Discord not solving for? It's not meant for edtech. What is Telegram not solving for? How am I not able to monetize in Discord? So a lot of such problems exist inherently. That's a great starting point to then build your user base. And you actually don't want to start off at 10,000 user base with MVP in any case. So a good starting point is actually to plug into some of the existing communities in whatever shape and form they are. It could be some of the channels I mentioned. It could be something else that I'm unaware of. But plug into that and then build a slow and steady user base from there to actually migrate or use your product in addition. And there again, it's likely going to be free because no one's going to come and test your product and pay for it when it's in an MVP shape and format. So just get people to start using it and then build out on the product even better based on feedback.
I think one point, if I can add to, of course, what Sunitha said, another interesting approach that I've started seeing these days is where founders are building their own communities first and then transitioning those micro communities to of course their product, right? Where and that is a great approach as well. What you are saying is that the community that I'm building, the selling point has to be me, right? It has to be born through me, or it has to be thought through me. So why not I build a community first where I am most active in front of the students, where I am being a resource person, where I am being a person they can trust and they relate with what I share and post content with, whatever, right? uh, and that using that as an embarkment, and then moving towards a community where I can say that, okay, now you've come to me and you have sort of accepted me, so I've sold you on myself, now let me sell you on my platform, right? And where I talk about what I do next. And that is in fact something that I've personally done as well, right? Where I've thought that building a community out has to be known by the leader who's driving that community as well, right? You have to be with your audience most. Of course, existing communities would help you in order to get that what you say, a kink in statistics, right? Would help you to get that kink. But the next thing that would happen is the self-driven community that you will build through your own self, and that is one great model. You have seen so many tech companies who have evolved from that model. Yeah.
Great. Thanks, Aditya. Thanks, Sunitha. There's a question from Ocean. This question says, how do you all see the role of Web3 and blockchain technology in edtech? Any recent examples of investments that they can look at to understand? I think for Ocean, one example that you could look at could be Invac Metaversity. They're running a learning experience on the metaverse. They got funded recently. Yeah, you could look at them to sort of see somebody who's making a play on Web3. But if anybody else wants to jump in.
Yeah, I think largely the models, if you're talking the intersection of edtech and Web3, I think that's largely been, I mean, everyone today wants to learn a little bit more about Web3 and crypto, right? But nobody seems to know it that well. So there are multiple companies out there trying to teach people how to do this better. And of course, there are, basically edtech for Web3 companies out there, and a bunch of those. I can share a list. I think outside of that, I think the overlap between Web3 and sort of education in some sense, right? I think you could also argue that there could be decentralized organizations for DOAs for teachers, where a lot of what teachers do today isn't sort of rewarded in ways that they should be rewarded, like let's say the content that they create, or you could take multiple examples along those lines, but a very simple example is content that they create, right? You could easily make those into distinct elements of a blockchain, which are then utilized by other teachers, and the teacher who creates the content also gets paid for it, right? So I think there are a few applications. It's still very early, at least from what I know.
I think it's an early stage for everyone, right? I think Web3 in itself is such an early stage that forget edtech in other aspects as well. Those learnings are still happening as to how it can be integrated. But I think one company which sort of we haven't right now invested in, so I'm not the liberty of course, speaking publicly about it. But a lot of these companies in India specifically have started building models around the workflow management that is specific to maybe any sector, but in education sector as well. How a Web2 was not able to solve it, because Web2 was not able to bring those two mediums at one place. But how Web3 does is it brings the entire 3 or 4 whatever dimensional structure that it is, and all of them are working at one single screen together. So a lot of these solutions, Indian startups, again, very early stage, but a lot of such solutions have started to build where proper workflow management is happening. A lot of note making, a lot of note delivering, a lot of further analysis of whatever you discussed today, what was our post class discussions that have started happening in the metaverse. So again, very early stages, but yeah, as in we are looking at that sector, in fact building our thesis on it accordingly.
Great. I think unless anybody else wants to chime in, those are the questions for the day. We're also running out of time. But thank you so much, everyone, for coming in today. It was a great discussion on the green flags, red flags, business models, monetization. The Q&A was certainly very interesting and great to learn everybody's thoughts. Thank you to the UNCEP team for having us. Thank you, panelists, for coming along, giving us the time of the day. Really appreciate it. Thank you to the audience for staying and interacting with us. I'll hand it over to the UNCEP team from here. Thank you. Have a nice day.
Right. Thank you so much, Vivek, and a big thank you to Radhika, Sunitha, Saketh, and Mr. Arora for being here with us. And I think there are a lot of industry insights that every one of you has have brought this to light, and it's very important for our speakers to understand the kind of audience, and I'm very glad that this has been very beautifully put across all the points, and really would like to thank you, each one of you, for sharing those deep insights. Abhinav, anything from your end?
Again, thanks so much, each and every single one, for your key inputs that have been for the entire audience that has been there. I'm sure every single word has, being spoken about has been of great learning to each and every one of us, especially the red flags that are being discussed. So thank you, one and all.